start off with the UK, just talking now about the PMI numbers. We've also got some new housing data out. Where are you seeing sterling? It's been under pressure earlier this week, of course.
Yes, it has, and I think it's interesting that whilst we've had this run of very strong data over recent weeks generally, we have seen some residual sterling strength, but you could argue that it hasn't really been able to keep up with the strength of the data, and I think that's underlying a message that international investors are reluctant to buy sterling because of still some concerns about the validity of the data or the ability to maintain strong growth prospects into next year. And I think if we do see some degree of consolidation in the manufacturing PMI today, but also in terms of the construction and particularly service numbers early next week, then I think that will continue to give opportunities for investors to continue to lighten positions, particularly against the US dollar, which has seen a pretty robust rebound in the wake of markets just reassessing the level of US yields. But I think sterling does look a little vulnerable to a further downside correction.
And just picking up what you were saying there about the US dollar, I mean, have you been surprised by the actions of the Fed and has it changed your expectations about when we're going to see some tapering?
Well, I think this week was always about a holding strategy as far as the Fed was concerned. I think the statement itself was very much that. It was just holding station until we get to the December meeting when we do get some substantive data perhaps for the Fed to actually consider. So I think those that are anticipating a much more dovish statement on Wednesday were always likely to be somewhat disappointed. And I think the reaction that we've seen in the market was clearly a market looking for dovish tendencies which failed to be met. And I think we're now seeing some signs that we are moving through the government shutdown. If we start to see some slightly firmer data coming out towards the end of this year and into the turn of next year, then I think that just underlines the fact that the market may well have got itself wrong-footed again in terms of tapering in the same way that it did in September, in so much as we now see this sort of consensual view that tapering is going to be pushed well into the middle distance, perhaps as far as April or maybe a little bit further. But I think we could still find there is a risk that we can see some tapering before Mr. Bernanke leaves office, perhaps looking at that January meeting as a parting gift. And that does provide some opportunities for US yields to continue to grind higher, but also the dollar to improve and strengthen also.